Well, first the announcement, then the ex-date, and now finally the listing. That's what everyone's tracking for ITC Hotels D Street tomorrow. It's not a debut by being in the listed space per se, but for the first time, ITC Hotels lists as a separate entity. 140 hotels is what they have right now, 13,000 keys, nearly 45% owned properties, 55% managed, and they have a stated objective by 2030 having nearly 200 plus hotels along with 18,000 keys and 65% managed portfolio as well. What happens to this business? It lists, it's seen a sharp growth in revenue, close to 1,500 crores in the first half itself, along with 28% margins. Post-pandemic, the last 3 years have been fairly good for the hospitality sector, of which ITC Hotels has been a big beneficiary. The stock that lists tomorrow, the company has zero debt with cash balance of 1,500 crores. A fair amount of headroom for growth because only 20% of its inventory is operating at 75% of potential occupancy. Capex at around 8 to 10% of revenue, looking for value accretive M&A and alliances as well. The question, how do you value this company? If you assume that this year they do about 3,700 crores of revenue and 1,200 crore of EBITDA, and by FY26 they do about 4,400 crore of revenue and close to 1,450 crore of EBITDA, and apply to them the multiple that is between Indian hotels and chalet hotels, anywhere between 26 to 28 times, then you come up with the ITC Hotel entire merged entity close to around 39,000 to 36,000 crores in terms of an enterprise value. But remember, 40% of this will be held by ITC itself, so you have to remove that 40%. The value per share of an ITC business, the hotel business, on ITC share was 17 to 19, listing price between 175 to 190. But tell you what, you have a reference rate as well. ITC share adjusted by 26 rupees on the ex-date, which implies that the last discovered price of the hotel business is 260 rupees per share. Will that price actually be the one that is discovered tomorrow or not is the big question. But thereafter also, we'll have to keep an eye out on some of the passive fund flows as well. The stock is expected to meet criteria for inclusion in the MSCI Global Small Cap Index as per Nuvama Quant. And remember, because it's a demerger of a Nifty company, it's been part of the Nifty itself. 3 days after listing tomorrow, it will be expelled from the Nifty. And when that happens, there will be $100 million of outflow on Nifty expulsion and $65 million of outflow on Sensex exclusion as well. So those are a couple of factors that we'll keep an eye out on. The street values it between 170 to 190. The ex-date values it between 260 to 270. Let's see where the stock lists tomorrow. Hey, thank you for watching this on CNBC TV18. Hope you liked it. For more such interesting news and updates, follow CNBC TV18 on all the social media platforms.